from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, it was quite the week for breakups, company breakups, that is. GE, Toshiba, and now Johnson & Johnson all announcing a business split. Could this trend spill into the tech sector where so many have been calling for the breakup of big tech? We'll discuss. Plus, a Disney Plus stumble puts a damper on the streaming service's birthday party, how the less than expected subscriber growth overshadowed their celebration. And outspoken short seller Carson Block is back talking about Elon Musk and retail investors, what he has to say about what he calls the Reddit crowd and meme traders later this hour. We'll get to all that in a moment, but first let's get a look at the markets. U.S. equities climbing, led by tech and communications, as inflationary pressures continued to reverberate through the markets. Our Ed Ludlow here to paint the picture. Ed, take it away.
Yeah, it's interesting because inflation was the story of the week, right? But no worries. Look to the equity markets. We get past those concerns and technology leads the way. What a nice way to end the week on a Friday. NASDAQ 100, tech-heavy index, of course, outperforming the S&P 500. Also strength in those mega caps. We see that in the NYSE FANG Plus index. Names like Alphabet, the parent company of Google, Facebook, Apple, of course, and Tesla in there. And also semiconductors up 0.8%. Inflation is the name of the game. We've got the strongest print in October, the fastest pace of inflation growth since 1990. To be honest with you, I wasn't around in 1990 to see the last one. But if you look at the categories in which prices are rising, there is concern here. Why? Well, because of this. Consumer, the US consumer, is what's been driving economic recovery, supercharged spending. But with energy rising, goods like televisions, what happens if the American consumer cools off and that falls down? The other part of it as well is that if inflation is overshooting, we had this hot print, could we see tighter monetary policy? In other words, the Federal Reserve be more aggressive with the way it tapers its asset purchases along with the rate path going forward. You look at the US 10-year yield, though, we're not at the highs we were at in, say, March of this year or even mid-October when we were above 1.7%. US technology stocks rising, the equity market at least is sanguine. One corporate story we have to talk about to finish on, Johnson & Johnson, spinning off the consumer business to become two separate entities. You can see it kind of had a mixed week, largely trading lower, and then a jump of around 1.5% on Friday. That's an interesting reaction, but as you said, this is something that we've seen before, Toshiba, GE, and we've seen it before in the pharmaceutical space as well. Something to dig into. Emily.
All right, Ed, thanks much. I want to stick with the split of Johnson & Johnson. Chair and CEO Alex Gorsky joining Bloomberg earlier, saying both businesses will have mid-single-digit growth potential. Take a listen.
Both of these businesses have the potential to be growing at least mid-single digits and above going forward. And we think this is going to better position our consumer business in this evolving environment that I mentioned earlier to be even more agile, more flexible, and even more innovative to reach more consumers around the world.
And this isn't the only company that recently announced a split into multiple companies. Earlier this week, GE and Toshiba also announced they're splitting up. Could it happen in big tech too? I want to bring in Bloomberg's Naomi Nix to discuss. So obviously, Naomi, there have been lots of calls for breakup of big tech. But do you think this is something that we could see Facebook, Google, Amazon go down the route of, with these companies paving the way?
I don't think we're there yet, but what we are seeing in these companies is they're increasingly diversifying their businesses, right? So Facebook renamed itself Meta. It says it's now a metaverse company. Last quarter, it said it would be splitting up how it reports its sort of revenue and expenses for its virtual reality division and separating that from how it reports its social media business statistics. We've got Google investing in healthcare. We've got Amazon, which just bought MGM and obviously has its e-commerce business and its cloud services business. And so the more, these companies try to pursue these disparate lines of business, the stronger the case becomes for this kind of spinoff.
How difficult would it be for a Facebook or Meta at this point to break up? It almost feels like with the rebranding, they're almost paving the way to make it make a break potentially cleaner?
Yeah, I mean, previously the conversation has been around, would Facebook try to split up from, Instagram from its Facebook core app or WhatsApp? And what we've seen in that area is the company has been increasingly intertwining those services in little ways and big, for functionality, but also behind the scenes. But this virtual reality business is different. So I think it really depends on how much these companies decide to interlock those services, makes that proposition harder or easier.
Well, and the big question is, will regulators force their hand, Facebook or others?
They could, right? We're not quite there yet, but obviously Facebook is in a battle with the Federal Trade Commission over its acquisitions of Instagram and WhatsApp. The agency has said that the company acted anti-competitively and has sought to unwind those mergers. We have state pressure on that level as well for Facebook. Google is facing a lawsuit from the Justice Department over its search business. We reported not too long ago that the DOJ is also looking into its digital advertising business. Google's also facing state probes. And so the more and more that drumbeat increases for these tech companies, the more pressure they're under to make that kind of move and essentially spin off their businesses.
Okay, Bloomberg's Naomi Nix, thank you for giving us your viewpoints there. Meantime, Morgan Stanley says the metaverse will only get real when Apple decides to join. Facebook and Google have been investing in virtual and artificial reality, but a Morgan Stanley research note says mass market adoption of either technology won't happen until Apple enters the race. The bank estimates the hardware market for the new gadgets could be $100 billion by 2030. Coming up, when one door closes, another one opens. And for Open Door, quite a few have opened, with Zillow leaving the home flipping market. My conversation next with Open Door's CFO about how it can succeed where others have failed. This is Bloomberg. Zillow may not have been able to make the home flipping business profitable, but Open Door sure has. The San Francisco-based company announced it's bought more than 15,000 homes in the third quarter, a 79% increase from the last quarter. Zillow, on the other hand, ending its flipping business and selling 2,000 of its homes. Joining me now, Carrie Wheeler. She is the CFO of Open Door. Carrie, great to have you with us. So how will Open Door avoid what happened to Zillow?
Emily, thanks for having me. I think there's a lot in being purpose-built. And when you think about our business, all of what we do is think about how to take that traditional listing process that is so broken and move it online and making it simple and convenient for our home sellers. And that's all of what we do. It's not our side business, it is our business. And we've got 7 years of investment in the team, the data, the modeling, the low-cost operating platform to be able to do that repeatedly at scale with a whole lot of growth behind it.
What do you think they did wrong? Why couldn't they get it right?
We're really just focused on how we're executing what we can do right for customers. No one's working harder for customers right now to give them an alternative to the traditional listing process than we are. And core to what we do are those two things I just mentioned. One is pricing. We have robust pricing systems we've been investing in since our inception 7 years ago. And two is having a flexible, low-cost operating platform that lets us do things like acquire 15,000 homes last quarter.
So these 15,000 homes, that's more than 160 homes a day, a lot of homes. I'd love for you to walk us through the logistical challenges of making all of this work, buying, renovating, and selling that many properties. How do you do it?
One of the things we did a couple of years ago that has served us very well is we centralized our operations. And so being able to operate at scale, a lot of that comes with the fact that we have built the automation, built the tooling and the platform to let us be able to do things like repair homes at scale, manage the vendor network, sometimes remotely, bring them onto our platform, let us understand the quality controls we need to have, and be able to do that so that we can not just acquire, but we can sell through homes and realize the kinds of margins we need to manage to.
Now, Bloomberg has reported that more than a quarter of the homes Opendoor has sold were acquired by investors. And I'm curious if helping institutional landlords convert owner-occupied homes into rentals, does that resonate with the company's core mission of adding liquidity to the market?
Well, you're right that our core mission is about infusing liquidity into the home market. Our target home buyer is not in the vast majority of who we're selling homes to. A small minority of what we do is sell to institutional buyers because we really view for the average homeowner, we want to make sure that we're putting as much liquidity into the market as possible, again, to make people, give them the ability to buy and sell a home with a lot more ease than they have today. There's a huge inertia to selling, just given how uncertain and tough and time consuming and stressful the traditional home selling and buying process is.
How big a share of the market do you think iBuying can become?
You know, today, when we get a seller with high intent, someone who really wants to sell their home, say within the next couple of months, well over a third of those buyers, when they come to us, accept our offer. And that number has ticked up consistently quarter over quarter. So you think about over time, our ability to be nationwide, be able to offer on more and more homes as we increase what we call our buy box, which is the surface area we cover in a given market. And you think about that conversion rate north of 35%, and we can be a huge portion of the real estate market over time.
All right, Carrie Wheeler, CFO of Opendoor, thank you for sharing your viewpoint with us. Appreciate it. Well, just days after Disney came out with less than expected subscriber growth, its streaming service has unveiled its latest lineup of movies and television shows to lure new viewers. Among them, theater hits like Shang-Chi and Jungle Cruise will soon be available on Disney+, along with new offerings from their biggest franchises like Marvel, Star Wars, and Pixar. But will it work? For more, I'm joined by Bloomberg's Chris Palmieri in LA. Chris, will it?
I don't know. I watched, they did a press preview on Thursday, a lot of the clips from the new shows in that. Part of the problem is this is stuff they'd announced back in December, almost a year ago. So, they got it made, which is good, but it sort of seems kind of familiar. One of the issues is people are criticizing Disney Plus for there's not a lot for adults, people who don't have kids, and if you're not a Marvel or Star Wars fan, compared to the deluge of content available at Netflix or HBO Max and that. And so I didn't see anything that was particularly surprising in the lineup.
Rich Greenfield was on the show yesterday of Lightshed, very vocal about the problems he sees with Disney and Disney Plus. Take a listen to what he had to say.
And they could have a really comprehensive service that could be driving subscribers at far higher prices. Instead, they're stuck in their silos and they're trying to balance all of their legacy businesses with Disney Plus, and balancing this whole balancing, they're losing. They're just not winning the way they could.
What do you think of Rich's criticism there?
Well, I think he's spot on in some way. I mean, one of the dilemmas that Disney finds itself in is, it's got three services in the U.S. It's got Hulu and it's got ESPN Plus in addition to Disney Plus. And some people are saying, let's put all that together. They already have a bundled price. You can get all four for $14. And hey, by the way, the reason why everyone went to streaming is because they were tired of that big cable bundle price, right? So they're still trying to work it in a way that you can do an a la carte service, but clearly all of the focus is on Disney Plus. 118 million customers worldwide. They think it's going to get to 260 million, and to get to that, you really got to get beyond just the families and the Star Wars fans.
Well, what are you hearing that Disney is doing about this? I mean, are they listening to people like Rich Greenfield or not?
They're still very much focusing in their lane. Bob Chapek was asked on Wednesday if there's any categories Disney Plus needs to be in, and he said more, and he said preschool, which is not exactly the direction most people are saying they should go. I mean, obviously Disney should have a lot of preschool content, but People want to see other content for adults if you're going to keep subscribing. They say they're going to have more than double the number of countries they're in. That's going to add to growth. And they're going to have 340 programs in the works in a short while, $9 billion in spending across all the various services. So they're certainly creating a lot more content. And whether this more family-focused channel works as the big business that they hope, that's going to be the test.
Bloomberg Chris Palmieri, thanks for your reporting on this. Coming up, how to make app building easy, how Airtable will help you build apps even if you don't know how to code, and what opportunities that is opening up in a post-pandemic workforce. That's next. And while tech earnings are wrapping up, it's all about retail next week. We're going to get a quarterly report from a number of big box stores, Walmart, Target, and Macy's, and see how e-commerce is playing into their business strategies. All the details here on Bloomberg. This is Bloomberg. Cloud collaboration company Airtable is out with a new product to make building apps easier for everyone. Interface Designer is a new tool that aims to help companies digitize their operations, especially amidst a shortage of tech talent. Let's talk about this more with Airtable CEO Howie Liu. Howie, great to have you back with us. So how do you allow people to build apps without even knowing how to code? How does it work?
Yeah, so we started with this database product that anyone could use to create their own business objects. So you can track customers, inventory, et cetera. And the new launch of Interface Builder now allows you to create a custom interface on top of that. And to really simplify the workflow, whether it's for somebody in field service or a marketing analyst, now they can actually see just the view of the data they want and perform their work as part of this broader business process.
We're moving into a post-pandemic future. Much more of the workforce is hybrid or remote only. How game-changing do you think a product like this can be in that environment?
So I think we have been definitely big beneficiaries of this shift towards hybrid work. I think in the old way of working, you could kind of get away with ad hoc ways of tracking data, of sharing data. You would meet with people, send emails back and forth, tap people on the shoulder. And I think today, when you have all these people distributed in different places, that just doesn't scale anymore. And so we've seen this massive increase in appetite from enterprises to consolidate all of their informational workflows, especially at the departmental process level, not just team or user level collaboration, but to really rethink how the entire content production process works, for instance, at a streaming content provider, or the marketing campaigns are orchestrated at a retail company. Those are the things that are now being, that are up for grabs, I think, in the software landscape. And we've seen, this increased appetite for our product, 130% growth on the enterprise side of our business, doubling the number of large ARR accounts over the past year. And so it's definitely been, a big shift in our space.
There are other productivity tools out there gaining traction. I'm thinking Notion, I'm thinking Monday.com. How do you differentiate yourself from them?
So I think there's roughly two buckets of products in this space. Notion and other products like it are sort of canvas-based products. And I think of them as almost a reimagination of what if you took Microsoft Word and Excel and all these other products and kind of mashed it up into a new fluid experience. And I think there's a lot of value there. Microsoft itself, I think, has recognized the space and came out with a product called Loop. They have a framework called Fluid Framework that's trying to deliver on the same type of value proposition. But I think ultimately it's a very organic and kind of smaller teams oriented nature of usage. And then separately, I think what Airtable is doing is going after low code and enabling businesses to go and create their own structured applications and actually trying to tackle entire departmental processes. And I think that is something that Monday, Smartsheet, to some extent Asana are also going after. But in Airtable's case, we've sort of been trying from day one to become this true application platform. And so where we see our advantage is being able to scale up to more complex deployments. We see very, very large enterprises building entire department-wide or even company-wide processes onto Airtable.
Well, speaking of large enterprises, Microsoft and Facebook, aka Meta, have announced new workplace products in the metaverse. What's your take on the metaverse, and is there a play for Airtable there?
Yeah, so I think there's kind of two extremes of how you interpret the metaverse. One is, it's literally this virtual space. You put on this Oculus headset, and you go in and you're immersed in this 3D environment. You have an avatar, et cetera. And I think there's something to that. I mean, I'm not going to dismiss it entirely. I think there's a lot of promise to that, but I think it's probably a long way off before the technology is good enough and there's enough of an ecosystem to where we're all spending a large percent of our day wearing a headset and immersed in that virtual reality.
So you're saying the metaverse is overhyped? Is that what you're saying?
I think there's a lighter weight interpretation of the metaverse, which is it's a set of principles. It's about creating a digital representation of yourself. And I think we're already starting to see that with a lot of collaboration products. You have lighter weight avatars. I mean, just the fact that in Airtable or Figma or these other collaborative products, you are able to create this virtual space and collaborate within it. And I think the actual 3D VR aspect of the metaverse is still a while off.
So speaking of the path forward, Airtable's obviously become a much bigger company since we last talked. What is the path forward to you? Are you thinking about going public? Are you open to a big deal?
Yeah, we've always been very committed to building a really large independent business. I mean, I think the opportunity to basically change the way that hundreds of millions of people work, and in fact empower all of these creators in the world to go and build useful applications and share those with other users. I think this is a once in a lifetime opportunity, and I think the winner of this category will be a multi-billion revenue business that could trade in the public markets in the $100 billion plus market cap range. And so we're all in on trying our best to become that winner. We think we have a good shot at it, and so at this point we're just firmly focused on building the largest independent business we can. I think IPO is somewhere on the horizon. I mean, we're at 9 figures in revenue, growing very quickly, and so we very much could be in the realm of being a publicly tradable business. But for now, we have no pressure or anxiety to do so too quickly. We're really focused on just executing really well, and I think IPO is probably kind of at least years down the road.
Okay, that's not too far, Howie. We're going to check in with you before then. Thank you for sharing the ambitions with us, Airtable co-founder and CEO Howie Liu. Appreciate it. Coming up, it is a game changer. I'm going to speak to one of the co-founders behind Axie Infinity, the game that pays you in crypto to just, well, play. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's take a look at how crypto performed this week. Let's get back to our Ed Ludlow. Ed, take it away.
Yeah, I want to zero in on Bitcoin, and it's easy to do, right? We track so many other coins these days, but at the end of the day, Bitcoin's where it's at in terms of the market cap, in terms of the volume. And 5 days of Bitcoin, right? We end the week $64,000 per token, but some volatility is creeping back in. Like 2 days ago, we were up nearer to 69,000. We swung down to just above 62,000. We find some normalcy. A lot of the news flow that the SEC decided against listing the Van Eck Bitcoin ETF. It was kind of a snub for spot listing. The SEC is turning up the heat on some of these cryptocurrency-based startups and looking at what they're doing. But as you know, I like to extrapolate out. So come with me into my Bloomberg Terminal, look at this chart at Bitcoin over a longer time horizon, a couple years. This is 14-day RSI. The red line, 70 level being overbought territory. Green line, 30 oversold territory. And if you just look over the last 2 years, Bitcoin loves hanging out. It's just hanging out at that overbought territory, right? And you know that a lot of the market's looking at these technicals saying, what's going to happen with Bitcoin? Where do we go next? Are we at a floor? Do we go up? Do we go down? It doesn't really matter. We've been hanging out in this spot for weeks at a time, and yet Bitcoin can continue to climb higher or stay as it is. So I just thought that was interesting, pointing out in a week where volatility comes back in. And lastly, come back. What happened in the middle of the week? Coinbase earnings. Everybody panics. Volumes down in the third quarter. Volatility down in the third quarter. A sell-off in the stock. Marathon, of course, a crypto miner follows suit. Everyone just chill out. We end the week on a high. And investors look past it. We see the same old trend as cryptocurrencies rise broadly, which we saw over the last couple of sessions. The crypto-related stocks follow suit. So, it's this whole age-old lesson. Don't look just in the short term, extrapolate out to the bigger picture, and then try and find some direction in these markets, which is really hard to do.
All right, Ed, we'll see if they chill this weekend or not. Thank you. All right, on to stick with crypto, which keeps expanding into more and more avenues, including gaming. The idea of playing games and earning money in the process is catching on, and no one has done it better than Axie Infinity. It's owned by Sky Mavis, which was only founded in 2018 and is now valued at about $3 billion. Joining me now for our weekly cryptocurrency segment is the co-founder of Axie Infinity, Jeff Zerlin. Jeff, great to have you with us. So much excitement around play to earn, and obviously Axie Infinity's take on this. Do you think this is the future of gaming? And if so, how big a part of that future will it be?
I think that this is way more than the future of gaming. This is a fundamental shift in the future of work. We are creating new types of jobs, which I think is so important because we're starting to see many types of work automated away, destroyed during the pandemic. So we need to figure out what are the types of opportunities that are going to be accessible on a global scale to anyone, anywhere in the future. And believe it or not, gaming is going to be a huge aspect of that equation.
For the people who haven't played or don't understand what we're talking about, what do you mean by new kinds of jobs that are being created?
Sure. So within our product, it's called Axie Infinity. Players can battle, collect, breed, and even earn tokens with real value just by playing your game. So this is creating opportunities in places like the Philippines, Venezuela, Indonesia, places where people are surviving on dollars per day and are able to earn actually more than minimum wage in their countries by simply playing Axie Infinity.
Still, it's kind of hard to dive in. Onboarding is not easy. You have to download all these different things just to start earning money. How do you make that process easier? And do you think that will be a critical part of really scaling this?
Definitely. It's still very hard to get started, but we came from the generation where when we were playing StarCraft and Diablo as kids, we couldn't take phone calls at our house, right? So new technology always has a little bit of a entry barrier. There's friction that always gets solved by builders. And that's one of the things that we're really focused on at Sky Mavis is making sure that it's super easy to get started with these NFT games, these blockchain powered games. And over the last 3 years, it's gotten much easier. There's still a long way to go.
Does the volatility of the crypto market impact you?
I will say that one of the advantages that we had as a community is that we started in 2018 during a bear market. And that actually, I think, really toughened up our community and made our community a group of missionaries, long-term thinkers that weren't always just thinking about short-term gains. I think that's really difficult in this market where people are coming in, right, seeing a lot of opportunity, and I think their incentives and their way of looking at the market are a little bit different. I think that the future of consumer apps are going to be built by builders and communities that are kind of impervious to market conditions, right? I think crypto is about empowering people to take back ownership of their data, of their digital items and identities. It's about so much more than just, right, like market fluctuations, Bitcoin price. I think that's the amazing thing that NFTs do, right? They create this accessible window into crypto that, right, if you're not just interested in purely financial applications, it's much more accessible.
Everyone is talking about the metaverse. Howie Liu of Airtable just told us basically that he thinks it's overhyped. How big a deal do you think the metaverse will be for the gaming world, and how soon does it actually materialize?
Sure. So different people have different definitions of the metaverse. I tend to think of it as the culmination of a trend where our digital lives start to take more and more importance over what's happening in the physical world. So we're starting to see these platforms, these real digital economies where you're able to form relationships, both social and economic, with anyone, anywhere in the world. I think Hollywood has kind of planted this conception of the metaverse that's a little bit, I think, harmful, and that people think that, oh, might require 3D technology, right? VR glasses. I think that the metaverse needs to be accessible to anyone, anywhere, regardless of the hardware that they have. So with Axie, 80% of our players are playing on Android devices, which is, the most accessible hardware in the world. I think that that's really important. And I think I'm against any definition of the metaverse that requires people to have, like advanced, expensive equipment.
All right, appreciate that perspective. Jeff Sterling, co-founder of Sky Mavis, and of course behind Axie Infinity. Thank you for joining us. Coming up, we're going to take a look at digital optimization company Amplitude's third quarter results, which also how things have changed since going public. We'll speak with CEO Spencer Skates up next. This is Bloomberg. The data analytics company Amplitude posted its very first earnings earlier this week as a public company. Third quarter revenue growing 72% year on year. The company also announcing a partnership with the data cloud company Snowflake. I'm joined now by Amplitude co-founder and CEO Spencer Skates. Spencer, great to have you with us. So you had a solid first quarter, but shares tumbled. What do you make of the investor reaction?
I think we're a high growth company, so we're going to have volatility in the stock. I think there's two things from my standpoint. The first is I love prices. I think prices are a great instrument of capitalism, and so people can make a lot of money if they think they know what the correct price is. The second thing I'll say is that I think people are a little over-focused on where the price is. I think we opened the stock way back when we first listed at $50 a share. We've obviously gone up a whole bunch since then. Stuff has come back down, but frankly, from my standpoint, I'm glad that we're done with the process. We can move and focus on execution and growing the company. I think of what I tell the Amplitude team is that it's equivalent of having a lot of very highly paid Vegas bookies speculating on your future performance, which, it's a data point, but not much beyond that.
All right, so what's the outlook for Q4? What are the bookies going to be looking at?
We're excited. We updated our Q4 guidance, which we increased relative to when we first listed as a company. So I'm excited about that. The other thing I did want to highlight is our customer growth. That actually I was really happy to be able to share on our earnings call earlier this week. So our customer base grew 54% year on year. We got to share a bunch of awesome stories on the call. Two in particular, Spirit Airlines, which uses us, which grew their relationship with us. They use us to increase mobile check-ins, and they're actually pacing ahead of their year-on-year growth goal thanks to some of the work that we've done with them. Another one is Square. I know FinTech, we were just talking about crypto earlier. One of the interesting things is we're actually seeing a lot of customer-facing teams at Square use us, so it's not just the data science and product teams. They're actually having a lot of customer usage, and it just goes to show how important product data is across all parts of a company.
You just released a report on emerging digital products and trends, finding that the use of digital products up over 50% over the last year. How did you come up with this list, and what did you find most surprising or enlightening about it?
Yeah, so one of the awesome things about Amplitude is we have a very unique lens into how people are using products. We collect data from over 6,000 different companies, and we have some really unique insights into how consumers are changing their digital trends. One of the big things that stuck out is that since the start of the pandemic, average usage of products overall has gone up 54%. So the average product has had a 54% increase in daily active usage since the start of 2020. So that's been crazy. One of the other ones in particular was that FinTech has had the biggest lift of all. I think it's not just crypto, but a lot of mainstream FinTech companies, including PayPal, Square, Chase Bank, they have seen their usage skyrocket since the start of pandemic. It's been up. Their usage has been up a total of 330% on average. And so I think it just goes to show, first, product-led digital companies are winning, and then it's really interesting to see the sector by sector comparison as well.
All right, well, we had that list up there, the 10 next hottest products in the U.S., as you call it. Some newer names there that I hadn't seen before, so we'll keep our eye on them. And you, Spencer Skate, CEO of Amplitude, thank you for stopping by. Well, the richest person in the world is now at the top of another rich list, and that is Tesla CEO Elon Musk, #1 on Bloomberg Green's list of 15 billionaires. Musk's fortune stems from a company that's revolutionized electric-powered transport and is speeding up the demise of the internal combustion engine. Meantime, it may take more than Musk's green ambitions, to sway short seller Carson Block. The CEO and CIO of Muddy Waters didn't mince words when talking about the Tesla CEO with my colleague Lisa Abramowitz as part of the Bloomberg Analyst Development Series.
I used to be very negative on him. As a person, I am, in the sense that he lies a lot, and please don't push back on that, because we could get into the examples, but every now and then when I say that on TV, somebody says oh, well, if that were true, then people would have sold the stock. It's like, no, it's pretty confirmed, and they bought the stock. But what are the good things about Elon? He built the car. He built the rocket. And that is something that I think a lot of these managements are not, and the companies are not going to do, like Lordstown Motors. All right. That seems, they, at least to date, the people who initially were with the company when it IPO'd, I think several of them are gone, and they were pretenders. We shorted a company earlier this year called XL Fleet, which is in, ostensibly the vehicle electrification space. And we were just, so we play, I like to say in this, when we do something like this, when we're looking at these tech, these next generation green tech or whatever hot technology it is, we play the man, not the ball. Playing the ball would be getting into the technology, does it work? And, let me get my scientist out here. And by the way, our scientists arguing publicly with the company scientists, our scientists will always lose in the minds of the long holders. But if you play the person, okay, what is this person's background? And what are some of the egregious things? What are some of the things that they've said that are really core to the thesis? And that if we scratch the surface, oh my God, these are not true, or these are massive exaggerations. So if we see exaggerations and, misdirection and lies that are significant enough, then we say, okay, this is not Elon Musk. This is not a guy who's exaggerating, but in, the most fundamental, important ways delivers. This is just, basically the same kind of guy who's existed since stock markets existed, a promoter who sells a dream that ultimately has no substance. So that's how we play it. And this does offer opportunities, obviously, for us to do it. But, it's pretty crazy when you look at Nikola in Lordstown. They still have these massive market caps. And that goes to this phenomenon. Every now and then I joke that 700 million is the new zero. And actually, you could say, even something in the billions is the new zero. There are all these companies that are really valueless, that have real cap.
Carson Block there never holds back. He also talked about how the short seller operates around meme traders. Take a listen to that.
The good thing from our perspective, or one good thing, is that they're loud. So they tell you where they're going. So, yeah. Right. And then let's get back to that whole point that we were discussing about position sizing. We don't run a lot of money by asset management standards. We're at, between the two funds, we're not even, we're like 250, little bit less than that. So we're able to get out of the way of most of these things. But yeah, when you look at what happened, it was just, I think last week, another short activist came out on a company, I think Cassava is the name, the ticker is Sava. Day after that short activist came out, that stock was up 50%, and I think it's been up since then. So yeah, the bottom line is you cannot be large in these positions if you need to get out of the way quickly of the Reddit crowd and the meme traders. And again, they don't, they don't necessarily start with the question, well, what's a really good company? They, sometimes start with the question of like, who do we hate and who would be punished by my buying this? And so, yeah, when you're in that environment, be small, be nimble, and, and just manage risk. I mean, it's on the short side, it's always been about risk management, but never more so than now.
There's also been a huge trend with a discussion about moving to ESG and putting money into greener companies, greener types of technologies. And I think about some of the electric vehicle companies that have gotten completely pumped up. And I'm not just talking about Tesla, I'm also talking about Rivian, which just IPO'd this idea that it has now a market cap basically as big or bigger than Ford, even though it has only delivered a couple of cars. Is this a concern, or is it just something specific to the moment that you don't want to get in on one way or another?
Well, we've done some shorting in that space, so I think it's the trick with shorting something like in the EV space or a technology that might really have a future and that future could be important is it's separating the CEOs or the founders who actually are going to do something substantive from those who are just total pretenders.
Muddy Wilder, short seller, Carson Block. Coming up.
I love you, baby. Falling in love. Now said by me. Oh, it goes.
How China is taking the connected car to a whole new level. We'll show you what happened when our reporter took one for a spin and a sing. This is Bloomberg. Carpool karaoke has been a hit in the U.S. for some time. In China, now some electric car makers are trying to make it part of everyday life. Bloomberg's John Liu reports on the evolution of connected cars, including in-car payments, social media, and karaoke.
I love you, baby. Falling in love. Now said by me.
Maybe that's enough. China is the world's most important car market today. Every year, there are some 25 million cars sold here, far more than any other market in the world. Big global brands like Volkswagen, like BMW, like GM have had great success here. But at the same time, it's become increasingly clear that in some significant ways, they are starting to fall behind some of the local competition. One facet that really stands out is the connected car.
除了说刚才听的 QQ 音乐呢，还会有喜马拉雅呀，包括正常的电台等等这些东西。
You have a cohort of up-and-coming Chinese companies that are increasingly allowing Chinese consumers to live their digital lives at home and on the road. That means in the car, they can have their social media, they can have their gaming, and they can have things like karaoke.
Darling, darling, stand by me.
It's not your usual road trip. It's big business for companies like XPeng, NIO, and Li Auto, who are at the forefront of this trend, besting Western rivals by offering models with karaoke microphones.
So Stella from Li Auto is just showing us some of the functionality in the car. What I do is I take my phone out and there's a QR code here in the car. Scan the QR code and it takes you directly to your own social media account.
So we're here at XPeng. We're in the XPeng P7.
So the XPeng car by default, the entertainment function, so the karaoke, the gaming, the movies are not able to work when you're driving. So they're by default turned off when you're driving.
But after the car has been purchased, the owner can change the settings so that passengers can enjoy the functions. For many Chinese drivers, the car is more than just a way to get from A to B. It's also a place, when parked, where they can enjoy time with friends for a bit of karaoke or even a picnic. Electric car makers in China are competing on what happens inside the cabin, from social media integration to voice recognition software.
Hi, Nomi.
我来啦。
帮我们放首歌。
A car's digital technology is particularly key to luring China's consumers. As you're shopping for a car, how important are these functions, be it WeChat, be it karaoke, these digital functions in your decision of what car to buy?
性价比吧，还是比较重要的，因为在生活中它更便宜，就是使用起来的费用比较低啊，或者什么的，还是比较重要的。然后还有就是它的一些现在的一些科技吧，比较科技感比较强的，或者是一些辅助作用比较好用的一些比较好一点吧。
Electric vehicle sales have surged in China. They're forecast to more than double to 3 million units this year from 1.37 million in 2020.
Darling, so it goes. Some things are meant to be.